Hi, and welcome to another chart session at Tough Guy Trading. Today we're going to look at how to do pre-market analysis in Forex and futures. The markets are 24 hours, Forex and futures, and it's always good to do pre-market analysis before you start trading anything, because you don't want a big breakout to happen and then you just end up buying it or shorting it because it's a big move and it's happening. You want to be able to anticipate moves as they happen. So I am starting this pre-market analysis at 11:07 tonight. It's Monday night. Okay, so let's see here. Okay, so we'll start on some charts first. On Thinkorswim, it gives a lot of amazing options. Thinkorswim is a great platform. Um, it gives the option to have a watch list, and I'm pretty sure for other traders you have your own watch list already, and you can see, just your whole list here, and you can kind of just go through the whole list. So with mine, I'm going to do a list that I created, and on this list here, it's mostly futures. The currencies are something I always look at, and to be able to, in the way I do my pre-market analysis, is I maximize the daily chart. After maximizing the daily chart, I have all my indicators are on here. All my indicators for all my charts are all the same. So a daily chart, a 15-minute chart, a 5-minute chart, a 1-minute chart. The charts that I use, I use the hourly chart and 4-hour chart as well too, but I use those a little bit differently, and we're going to kind of go into those two time frames, the 4-hour chart and the 1-hour chart, just because this is futures and it's at night. It moves a lot less than it would probably move during the daytime. Unless it's some kind of market news or something like that. But for the most part, these are my indicators, and I use them on all time frames. So you can expect to see the same thing on all time frames. I have the purple lines are the Bollinger Bands. The red line is the 20-period moving average. The blue line is the 8-period moving average, and these are all SMA, simple moving average. And the green line is a 200 simple moving average. Okay, so if we start here, our very first chart is of DX. DX is the US dollar. So what I normally do is when I do my pre-market analysis, I kind of get a feel for how the market is trading, right? We kind of went sideways here, move up, 1, pull back, 2, pull back, 3. And you notice that even when this pulled back on this first move up here, it never comes back to this red line here, because we have a very good steep moving average. And I'll explain what that means later. But when you have steeper moving averages, you don't have big pullbacks that occur. Anyway, so the market has gone up here once, has come back down, pulled back twice. At the top here, made a new high, has come down, and this time when it came down, it didn't actually come down back into the 200, right? It kind of came down a little bit here, and then now it's going sideways. I normally call this an AB pullback, but for other traders, just to keep things general, this has gone sideways. This means a lot more to me than just going sideways, and I can explain what that is at another time, but for now this is going sideways. So what I would normally do is come here and you simply just put on a support and resistance line, because it's nothing major, because you want to know when the market is going to break out. When can it make a new high? When can it make a new low? And keep in mind, all these things that we're going to talk about going forward are not for you to take out there and go trade and exercise and try to see if you can make money off of a strategy that I'm teaching you in 10 minutes that maybe took me 3 years to learn. It's not to do that. I just want to be able to offer some insight. And maybe if you're kind of foggy and you're kind of, not sure if you want to trade or not, here's a better look at it. When I started, there wasn't really that many platforms that people were using to actually show new people what does a chart look like, how do you do pre-market analysis, what kind of charts do you stay away from, what markets should you be in, when should you be in them, what time of year, all these different things, questions. And if you don't know, you're down there and you're trading, it could be very, very hard. So let's just stay more on education and just look at what I tell you as maybe a tip, but not something that you should use and start to trade with. Trader education is very good. And you have to separate education from actually execution, because those are not the same thing. There's a lot of people who are very educated on a subject, but they're not that great at executing it. And to execute, it takes a different type of mentorship, different type of learning strategy, and I don't really currently offer that at the moment. So, just take this as a somewhat of a trader education. Okay, so now here, I would put my support and resistance line just at the top here and right here at the bottom. Not for any particular reason, just because this is the immediate high and this is the immediate low. I mean, I guess you could trail this back and see at the top here, it didn't break. If I zoom out some, we could see a little bit more. No, it's not giving us any more. But this is the last high here. But mostly what you want to focus on is the immediate high and the immediate low, because we're working on the 15, the 5, and the 1. And we want to see an immediate trade, right? And we want to know when we're breaking crucial levels. So this is DX. The next one would be 6B, the British pound. And keep in mind, all these markets correlate. I'll go back to DX for a second here to explain that. All these markets correlate. So if the dollar's going up, a lot of the other currencies, the British pound, the Canadian dollar, they're going to be going down. And that's very, very important. So if I see, there's a reason why I have DX as the first thing on here. If I see DX going up, I'm going to start to look everywhere else and see what other things are doing. And that becomes very, very important, because what if you have another symbol or instrument that moves and makes more money than DX does? It would make more sense to maybe not trade DX at all and just kind of watch it, right? And track it, and trade the other instrument that moves in a more favorable fashion as far as making money, right? And you can kind of use DX as a hedge. You got to watch the instrument you're trading as well. You can't let go of that fact. But this is kind of somewhat of a help, because all markets correlate. Some people take correlation too far, and they're not trading the instrument anymore. They're watching something else to tell them what the instrument they're going to do is trading, and that's weird. You can't do that. You have to know your instrument. Okay, so the next one here we have is the British pound. Like I said, again, immediate high, immediate low. That's it. Nothing major. I'll go on to the next one. This is the euro, symbol E7. And again, we're putting this on, this one's mini gold here. We're putting this on the high and the low of every instrument that we're going to trade, for the simple fact that if they break to the upside or downside, we're aware of it. The very first chart I went over, I kind of did more of a analysis as it relates to just the chart and how the chart's behaving. How the chart's behaving long term doesn't matter as much to me. Maybe if you're a different type of trader, what do I mean by different type of trader? Let's explore that for a second. A different type of trader would mean if you're a swing trader, if you're a position trader, if you're going to hold on to this for 2 or 3 weeks, a month, or something like that, then maybe you probably are going to need more than just these 2 lines and start trading tonight. Because, obviously when you're trading, you're picking a position and you're going to hold on to that and trade the general direction of the market. The ups and downs don't matter as much. For me, the ups and downs are huge. I'm in on the ups and I'm in on the downs. I like to go long and short all the time. So I have to be on both sides. For other traders, that's probably not their style. So keep those things in mind as I'm talking about this, because I am only using a daily chart, and maybe if you were a swing trader or a position trader, you'd want to be on a further time frame, right? This would probably be a secondary chart, a daily chart. Maybe you'd probably be up there on a weekly or a monthly chart, just because that's going to give you a clear picture and not so many failed signals and failed setups on how to hold on to a trade a lot longer. I don't hold on to trades long. I'm in trades for maybe about 1 to 3 minutes. The longest is probably maybe about 30 minutes. But I don't hold on, even then 30 minutes is an extreme for me. I don't hold on to trades normally that long. It's just, I can be on both sides, so why not? And I'm starting to understand the market in such a way where it enables me to. There's other times in the market where I'd probably take a lot more risk. But that was in the beginning when I first started trading. You know, now I'm more considering, risk management and how to protect your capital, because those things are important. And if you're going to take immediate trades, you could lose a lot of money if you're not careful. So having risk management is very key. It's something I emphasize all the time. I put it into practice all the time. It's not something that you can negotiate with, right? You can't negotiate with discipline. You can't negotiate with risk management. You just can't. You won't be able to do this if you can't control yourself. If you can't let go, if you can't cut a loser. Because not all my trades go green. Not all my trades work out and go to the moon. I'd love for them to, but they don't. And it's important to understand that, and it's important to cut the loss, because they won't. You just got to be able to minimize your risk. And it only takes more educated and smarter trades. And doing pre-market analysis cuts back a lot of the risk, because you're more aware of what may or may not happen. Okay, so I flipped through a few charts here. I'm going to stop here. I could go through the rest of them. All I'm pretty much doing is putting a support and resistance line at the top, support and resistance line at the low, at the top and at the bottom. We can say at the top or at the bottom, or at the high or the low, but just keep it simple, because it's just pre-market analysis. You just want to get kind of sort of a feel for what's going on. I have other charts to better help me after I've done pre-market analysis. And generally too, after I've done pre-market analysis, I'll have somewhat in my mind which charts have the best setup on the daily chart, and then I can flip through the 15, the 5 to see if there's something going on more that I could possibly take advantage of at the moment. Okay. Okay, the next thing I would like to bring up here is a 6 chart. Let's see here. Okay, on my 6 chart, I should have more lines on here, so I'll go back. Well, even here, we can stay here on the 6 chart. On the 8 chart, I'm sorry. There's 8 charts on here. Okay, so on here, if we look at this a little closer here, so now it's 11:19 at night. The night's going on, and there's nothing really going on, right? Everything is going sideways, sideways, sideways. If we start with each chart and we look at DX here, we look at the US dollar, it's come down, broken the 200, which is very important. But after it came down and broke the 200, it just went sideways. Came up here, broke the 20, sideways. It may want to come back and test this 200 here. If you are a patient trader and you want to hold on to trades for a long time, this would be a good trade to potentially hold on to and put a stop right underneath this bar. I will only lose 1 bar. That's a part of my risk management as well. That's what I mean. You can't let go of these things, because they're very unforgiving, and the market doesn't know that we're here. It doesn't mean to hurt you or offend you personally. It doesn't know you're here. And the market is only willing to deal with people who are willing to follow. If you're willing to follow, it's going to be your best friend. But if you want to outsmart, trick, get in too early because you know it's going to go here and you know it's going to go there, it gets very, very hard to do this. It really does. It gets very, very challenging and very, nerve-wracking. You could go crazy. Okay. So if we look at these a little further here, everything has pretty much gone sideways. There's no real big movements going on tonight, not that I'm aware of, not that I see here. In a lot of these charts here, I've got DX here, I've got the E-mini Euro futures here, I've got the Canadian dollar there, crude oil here, the top 4th one. Let's see here, the 5-year Treasury note, 10-year Treasury note, soybean futures, and mini gold. As the night goes on, one of these may or may not move. So we'll see what happens there. But that's only on the futures side of the night, right? Because there's 2 sides of the night. The other side would obviously be the Forex. On Forex, Forex is a lot easier to position trade. In Forex, I trade a lot differently. We talked earlier about how, I mentioned earlier about how I was going to, introduce the 4-hour and the 1-hour. This is when I would do that. I would use here, maybe keep the daily chart here very small, because I only need to see the current candle that of the daily. It may be the last 3 candles or 2 candles. I don't need to see the whole picture of the daily chart. Um, so I would, where my 15-minute chart is, I'd make it a 4-hour chart. Where my 5-minute chart is, I would make a 1-hour chart. Where my 1 minute is, I will make a 15-minute chart. So now I have a daily chart, 4-hour chart, 1-hour chart, 15-minute chart. And this works amazing in Forex because Forex moves just so much slower, and even if you don't like to hold on to trades for a long time, if you want to do well, you're gonna have to hold on to the trade for a while. It's just the way Forex is. Alright, let's see here. So load a list of Forex. And on Forex, just as well, we're gonna do the same exact thing. Take the daily chart. And put a put a support and resistance line at the top and at the bottom. Sorry, I'm using the wrong instrument. So I'll go through every Forex pair the same way we were doing in futures and put a support and resistance line. And normally when I'm going through, you're obviously, like I said, you're looking for the ones that have the best setups, the best moves. This may be a good short here. I like this setup. But the ones that have the best setups and the best potential that night to potentially make money or something like that, those are the ones you want to highlight and watch more, right? And be aware of the news as well, like I said, because news comes out overnight. As you know, I'm in Boston, Massachusetts here, but maybe if you're in Europe, if you're in London, if you're in Italy or something, you got news. It's daytime there now. So just keep those things in mind. This is my pre-market analysis. This is how I do pre-market analysis here at ToughGuyTrading. And like I said, maybe you probably have a different way of doing your pre-market analysis. But hopefully the way I'm doing some of the things are giving you somewhat of an insight to how someone else does something. And the way I do pre-market analysis works really, really well for me because I capture a lot of good trades. Sometimes I feel like I should maybe build a robot at some point to take more advantage of some of the opportunities that I see, because I really just can't trade every single opportunity that I see. And I see so many of them, especially in the stock market today as well. I did some trading as well in the stock market. And keep in mind, all the trading that I do, that I post on here, is simulated. I want to emphasize that because it's not to make money. It's just to show you that the system works. I haven't really dug into too much on any video on how the system works exactly, but it does work. So today, let's see, for example, today I'm up $3,861. I made $1,800 pretty much in Apple, $950 in Google, 684 in Priceline, $72 in Mini Natural Gas. I lost $44 in sugar, and I made $375 in silver. And this is another perfect example of what I meant by cutting losing trades. I could have stayed in SB all day long. I'll go back to a chart real quick of SB here. I could have stayed in this trade for a long time. I tried to go long. I thought it was over. I thought this was the bottom for sure. This is over. But the trade didn't work. And I kept a very, very, very tight stop loss on it. I mean, if you look at it here, it's $44, minus $44. I kept a very tight stop loss on it. So when it didn't work, I didn't get offended. I didn't care, even though it rained red all day long, and it would have been so amazing to be a part of it. But I didn't care. I cut the loss. I got out. I was done. Don't get emotional about it. Move on. There's plenty of other things that are willing to, pay me if I just don't lose control of me. And that's the most important thing in trading, is not losing sight of you and what you're able to do. Because when you start losing money, when you start making money, nothing's really changed, right? The psychology part of trading, nothing's really changed. You've changed. You're more excited because you're making money, or you're, upset or frustrated because you're getting in backwards and you're losing money, And, these are the moments when you need yourself the most, because if you can pull yourself together, 9 out of 10 you can probably salvage and make back a lot of the losses. It doesn't always mean that you'll go back green that day, and I don't even strive for that anymore. If I've lost too much, I want to make back most of my losses and recover a lot of the fees and get out of there. We can live to fight another day, but the key is living to fight. And if you're not thinking about it that way and you just want to get it all back, that just may not be possible sometimes. Because what if you start, you were up most of the day, and then towards the ending of the day you started to lose money, 1:30, 2 o'clock, you started to lose money, major reversals at 2:15, you start losing money at some point after that. It's going to be hard for you to get the money back, or you're going to have to use a lot of leverage. And in those circumstances, I would rather just try to make back most of what I can and then get them the next day. It just makes more sense. And I'm always way more profitable now because I think that way. And because I do think that way, when I'm up at a certain time of the day, I won't trade anymore. The day's done. Or very, very small risks, and I'm just putting icing on the cake. Icing on the cake. Icing on the cake. I've already made a whole cake out of this thing. I mean, if you're up $3,800, you've pretty much got a cake. A cake costs like $20, $100, or maybe $200 or $300. Maybe if you're a celebrity or something, $5,000, and it's not enough. Whatever. But a regular cake for a regular guy, is under $100. And anything above that, you're just putting icing on it, and icing on it, and icing on it. And that's the way I try to think about it. So as profits grow, I don't get more arrogant. As profits grow, I don't start using more leverage. As profits grow, you start to, if anything, de-lever a little bit more. And now you want to use less shares and less shares to make sure and guarantee yourself that you're not going to lose that money. You cannot give it back. The worst thing to do is trade and then give it all back, because you just wouldn't stop. Or you were up that day and then you finally moved on to some symbol that you were trying to outsmart. Again, that happens a lot when you lose money. You're trying to outsmart, and then you end up giving back a lot of your P&L that day. This happened, obviously, like I said, I was trying to pick the bottom on this loss here. I was trying to pick the bottom, and I was wrong. I was wrong. And I was trying to outsmart the market, and I was doing something before the market had revealed it to me. If I had waited until the market was deep, until the candles were deep outside of the Bollinger Band, and I'd seen a green candle print first, the next candle would have been my trade. But I didn't wait for that, and I just kind of tried to get in right away and keep a tight stop. And even though I tried to outsmart the market, because it happens to the best of us, right? It happens to everybody. But you got to keep tight stops on it, and you got to understand when you're doing it and when you're actually executing on the skills. When you know that you're trying to outsmart the market, you don't put on a lot of leverage. I don't. I can't. I will not allow myself to. And this is what I was saying before. You can't negotiate with discipline. You can't negotiate with keeping your money. You can't. That's not something you can negotiate with. And it's better to just let the trade go right on by. So this is Tough Guy Trading. I am doing a lot of pre-market analysis with you guys. My name's Robinson. We're going to be wrapping up here soon. But I hope you guys have gotten maybe a small picture of how I do my pre-market analysis. And as the night trades for the rest of the night, I will just keep kind of going back to some of the charts that I already had, that I already looked at and had put support and resistance lines on. And, as they go, I'll be aware of them. So, or sometimes you might find on the daily chart a setup that is so nice, you just want to trade that for the rest of the night. That happens a lot of the times too. I traded Apple today, and these things have to pull back. They can only do, I'll talk about this real quick because I traded this earlier today. I think it's important. It goes to the other point of outsmarting the market. In this case, I waited. Today, I waited. I've been waiting on Apple. After this extended run up, I've been waiting for it to pull back. I didn't know when it was going to pull back, but I was going to let the market tell me that, hey, I've pulled back. Come on in. It's safe to short now, instead of trying to outsmart it. So in this case, I waited. But if I look back at here at Apple, I am at $1,800 for the day because I waited. And on the other trade where I didn't wait, I am minus $44. Risk management, risk management, risk management. You have to be all over yourself. You really do. There's no other way to get around it. Okay. I don't want to go too crazy talking about risk management, but that's just how important it is. You could probably have less skill, because I haven't really talked about any of my trading style or anything like that. But you could have less skill and great risk management and outperform a lot of people just because you know how to cut losers and you let your winners run. And that gets harder for other people, to let their winners run, especially after you've been burnt so many times on so many trades. It's like, oh my God, if it goes green this time, and you're up a little green, $100, $200, you just hurry up and take it because you've been burnt so many times, and you're trading in a way that's kind of backwards now, and it's not going to really work for you. And if you don't deal with that psychology of losing and feeling offended, if you don't get over that, it's going to be really hard to grow your P&L. Doesn't mean that you won't be consistently profitable and have money, and over time you'll have this great trading career. Yes. But to grow your profits now, you won't be able to, just because of that wounded kind of thing in the background that's going on. It's a lot of, subconscious behavior that's going on in trading, especially for people that have been trading for a while and people that haven't been successful. They kind of go back to those hurt moments, and it's just like life. If you don't get over something, it'll play out all day long. And that's what trading's like. When you lose or you make money, and whatever, it just keeps playing out over and over and over again in your trading. And you have to reward yourself for successful trading, not successful P&L trading, but for successful, risk management. You have to reward yourself for doing the right thing and enforcing your rules, whether you win or lose. Who cares? Because only two things can happen when you enforce your rules. It's either you'll figure out this is not for me and I just gotta go because I'm not going to keep losing money, and I obviously can't learn the skill to actually make any money off of this, or you're going to be great at it. And that's going to happen real quick. It just depends on how much pain you can take from losing money, how much you study, and obviously, how well you enforce the rules. Because nobody wants to be walking around in a circle, right? You're always walking around in a circle when you don't enforce your own rules. But the people who do enforce their own rules, especially in trading, it's the same thing in life. It's easier when you enforce your rules to walk in a straight line. When you don't enforce your rules, you walk in a circle, and you don't realize that you're back at the same place you started until you get there again. Because you won't enforce your own rules. And when you enforce your own rules, you'll know obviously if you didn't enforce the rule that you're taking a step backwards. Whereas if you just don't do it at all, you just end up at the same place, and that's when you realize it. So I could go on and on and on about the psychology of trading, because that's how important it is, folks. I mean, there's nothing else. There's nothing else. And like I said, you could probably have less skill and still be better than most traders, P&L wise or whatever, just because you enforce your rules. It's that important. I'm also going to look at this last trade here that I'm in. This is a trade that I'm holding on to for a little bit longer, just because I think natural gas can probably still go up from here a little bit. It moves super duper slow, so it doesn't go that fast. But I'm also implementing a lot of new strategies right now, and this is one of them, to just kind of hold on to trades a lot longer. And I really like this setup here, which may or may not fail, and I will have a tight stop on here the whole time. That's part of what I was talking about, is keeping these tight stops on these things. So if the strategy doesn't work, it only costs me $50, it costs me $60, it costs me $100. It's not going to get into where it costs me more than $100. That's crazy. I don't even want a strategy that's going to cost me $5,000 to figure out if it's working or not. That's that's a little off the mark for me for how I trade. It just is. It doesn't mean that it's not a good style. It doesn't mean that it probably won't work for a million people out there. It just will not work for me. I cannot take any trade that I go that red in. I can't. It's not. That's crazy. Um, anyway, so if you look at this here, this is the trade I'm in natural gas. I am taking the trade based off of this low here, and I believe that this can keep going up. And if it doesn't go, then I'll obviously be out. Um, the last thing I'll talk about, because we talked a little bit about pre-market analysis today, and I mentioned how pre-market analysis has a lot to do with how you trade. Maybe for new traders, it's just an insight on what to do for themselves. But you should also have a hemisphere scope of what you want to trade. What is your, you can't just trade every single thing out there. A lot of, again, other people have different styles, and maybe that works great for them, because you can't say no to anything in trading. Everything works. You know what I mean? It's just what you're comfortable with, what you understand. I stick to what I understand, and I have a selected few of stocks, Forex, of currencies, of instruments and futures that I trade, that I like the way they move, I understand the way they move, I'm profitable from the way they move, and so I trade those. But it took me a long time, I've been doing this for a while. It takes a very long time to find and hone down on the ones you like to trade. If generally me, when I get a new instrument that I'm trading, I will watch it for maybe about a month, 2 or 3 weeks. I'm trading it, and I'll probably get a demo account just anywhere before I ever take it live. I'll get a demo account and trade it 1,000,000 times that day. Take 100 trades, lose. I don't care about the P&L. It's not even real money. Lose. Because you need to see how this thing moves, and how much will you lose in it. Can you lose? Is this an instrument that you can lose $500 in? Is this an instrument that you can lose $10,000 in? You need to know that going in before you start putting real money out there. If not, then, where's the homework? And sometimes homework doesn't mean charts and books and graphs and all these other things, and historical charts. And sometimes homework means doing it every single day from the perspective of a day trader. If you're a swing trader, you're a position trader, that might mean something else. But for a day trader, you need to know how much money an instrument can make you, and how much money the instrument can take away. It's very, very, very important. Capital preservation is key, because you don't want to end up with a lot of symbols that, yeah, you're really good at trading, but they don't make any money. Or, and the symbols that don't make any money, you know them because, what do I mean by that? I'll explain that too. The symbols that don't make any money, because if you lose $300 in it, you're going to have to use more leverage just to get the $300 back. You can't use the same amount of leverage that it took to lose the 300. Now you got to use even more leverage. For me, that doesn't gel well, because that means the instrument doesn't move enough. So, forming a pre-market analysis list to even begin with, to get into, and all this other research and stuff, is very hard. I would say that it's been hard for me anyway, just because I like to watch the symbol for a long time, and now every single symbol that I have now is my baby. But it works out very great in the end, because every single symbol you trade, you're going to be profitable in too. Because imagine if each one was your baby and you understood each one individually, and then when market correlation or breakouts or news or all this other stuff, it gets so much more profitable. So much more profitable. You can easily have a $20,000 day, because everything you trade you're comfortable with, and you know how much, when you flip to this chart or flip to that chart, you know how much you could potentially lose and how much you could potentially make. Every single chart I have is not a high flyer. I have low medium risk trades. I have low medium risk instruments. You just have to. You just have to. You have to be able to delever, because if you're up huge, you want to move to something that's not going to take that much money. So this is pre-market analysis, a little bit of trader psychology, and how I get the list together to begin with. I like to trade each symbol individually, so if I hear about a stock, I hear about a symbol, period, I'll put it up on the chart, look at it for a while. If I really like it, I'll download a demo somewhere and then trade it 1,000,000 times, try every single setup I know, pass or fail, and then see from there, and let the data tell me, hey, we lose too much in this, can't do it. Love it, but can't do it, because you're not married to any of these things, and they don't even know you're there. Or other times, great setups, but there's not enough money in the candles. Each candle's like 15 cents, and you're only making $150 off of 1,000 shares or something like that. It's just not worth doing. I like to see candles that maybe have $300 or $400 in it, so the potential of me making $150 is not hard. If it moves $700 or $800 in one candle, which is 70 or 80 cents, and I only want $200 anyway from any candle normally, that's fine. That works great. The economics in that works great. And if I use more leverage, then I can just stay in. If I use more leverage, I can sell one and stay in on the other one and collect the rest of the. I mean, if it's $700-800 candle, you only got $200 off of it. You could just let the other one run for a little while. Keep moving the stop up. Keep moving your stop loss. Stop losses are very important. Can't trade without them. Even if you're 100% sure about the pattern, you still want to keep on a hard stop. What if the internet goes out? What if your lights go out? What if there's, anything, period? You want to keep on a hard stop. So this way you don't have to call the broker. And you want to keep on a tight hard stop, based on a good pattern. You shouldn't randomly be shooting at trades anyway, so, the stop should make sense. Okay, so we're almost done. I think I've gone on long enough. I've touched on a few things, like I said, pre-market analysis, trader psychology, how I use my pre-market analysis, not looking down at any other trading style, because all of these things seem to work for different people. It's just more about what you're comfortable with, what you understand. That's what I mean by comfortable. Comfortable doesn't mean, oh wow, this one pays so much and I really want to trade it. That's excited. That's not comfortable. Comfortable means you understand it. When it pulls back, it looks like it was going to pull back there. When it takes off, it looks like it should have took off there. There's follow through. You're not just getting in and then it goes the other way, and then it's going to come back, and then it's going to kind of come back, and you're kind of going to be a little bit green, and then it's going to go negative again. That's not what I mean. What I mean is, and even if that is what you understand to be true when you trade a symbol, then that's what you should look for over a wide range of symbols. Because if you're good at trading that particular style in that particular fashion, that's a little bit too much irky jerk for me. But if you're good at trading it that way, you're going to be profitable. And you're going to be able to take trades when other people are sitting on the bench. So you have to be yourself in this game. There's just really no other way to do it. So again, thank you for joining Tough Guy Trading. This is another chart session with Robinson. And we look to see you guys again in the future. If you have any questions, anything you want to ask, we could gladly go through it. So just let me know. Thank you.